Most of the things in trading is simple, but they are not easy.
It is difficult to do. But once I started doing that, it turned around and I paid off all the debts. I accumulated enough amount to buy a property. My wife used to calculate all the debts, all the car loan, home loan, personal loan and everything. We have this much amount, this much salary, we don't have a savings, so it will take these many years to pay off all the debt. Every week she used to calculate that, and she would say, when can we settle and all. And one fine day I told her I have a surprise. I said I paid off all the debts. She was like shocked. And I said I was trading and I made money.
I heard you that you save intraday charts of last 10 or 12 years.
Not 10, not 2018 onwards.
2018 onwards, like almost like 5, 6, 7 years
yeah.
of intraday charts. Correct. And based on that, you kind of guess like how the day is gonna be.
I have so much of examples where the market rallied right from the open till close, or market fell right from open till close, or the extreme reversals. All these patterns we become more familiar and we can see that, okay, these kind of patterns are emerging.
Basically, trend following will
Correct.
again emerge, is
Correct.
what you're trying to say.
Yeah, exactly.
So, is that election ka trade your best trade so far?
No. My best trade, the one I liked was even before becoming a properly profitable trader, I was able to sit through the entire day. Whatever I bought for maybe 30-40 rupees, I was able to take it to 150 rupees or something.
What's up everyone, Praful here and welcome back to yet another episode of Breakfast with Traders. And this time, we are here in the God's own country, Kerala. You must have known a lot of successful option sellers. You may even be knowing few good option buyers. But there are very few traders that I personally know who can do both and seamlessly transition between the two. One such trader is our today's guest, Mr. Shijuman Antony from Cochin. Shiju is as discretionary as a trader can get and he has been in the markets for more than 15 years. I personally am a big fan of his meticulousness of methodology and his agility to change his bias in a jiffy. So let's meet Shiju and let's pick his brains and try to extract as much as possible from his 15-long trading experience. So Shiju,
Hey.
Thanks a lot for doing this. Welcome to Breakfast with Traders.
Thank you for inviting me here, and it's a great pleasure to be here.
Nice. So it's been what, more than 15 years in the markets?
Nearly 14 years.
14 years. So when was the first trade that you punched?
If you ask me the first trade, I think that was in year 2000 when I was in college. I was grown in a rural place called Idiki. So near my college there was a sub-broker. Okay. So those days there was no FNO trading, but cash market trading was there, intraday trading. So people used to come there and they trade big amount, and I used to see people losing big amount, at times gaining amount. I used to sit and watch people trading.
How did you first go to that sub-broking office?
It was right opposite to our college, and there was one of my friends who used to go there and trade, and he said, yeah, there is stock market trading here. I went and it was proper trading terminal. We could see the price ticker moving in, same like today. It is not like advanced system like web platform and all, but it was a terminal directly connected to the exchange. So I went there, and after a few days sitting there, I thought I arranged a little small capital, and the first trade I took in Wipro. I think before split it was trading at 1,400 rupees or something that time, and that was the first trade I took for 1,400, 5 stocks. I went to college, and after some time I came back. It was moving up. I again went to college, and before market close I came back, and when I checked, the price was more than 1,500. So it was just like 500 rupees profit. That was very big that time compared to means considering I'm a college student, and it was my first trade. And
it was 2000.
It was year 2000. Yeah.
So like at that point of time, 5,000 is like similar to like 500 is similar to 5,000. What's today?
Maybe yeah. So I was like shocked. Then I was happy also. Even the people who were trading there, they were also like looking at me like an alien. How did he make money? But that was like beginner's luck. Then I kept on trading every day, and maybe within a couple of weeks, the profit 500 plus my capital and everything vanished, because that was the only trade I think I got profit. And luckily that was the first trade also.
Okay.
So then I never thought about trading, and then I went for the job, and I was working in a company from 2006 to 2022. But after a few years, somewhere about 2009-10, then I thought, okay, the job salary cannot give me the life I want, or I cannot live my dream working somewhere. Then I thought, okay, I need a side income. So I thought, okay, why not trading? And one of my friends said, the sellers are making money because option sellers are making money because premiums are decaying. Then I learned something about options and option components, and I understood premium decay will be there. So I thought, okay, why not sell both the sides?
Post 2020 is what
Yeah.
everything turned for you.
Yeah. So after 2020 June, for the next 14 months straight, every month I was profitable, and every 2 months approximately, my profit was double than the previous month.
Wow.
And it was amazing journey. By 2021, my life was settled. I made that kind of money from the mere capital because of proper capital management, proper trading, and whatever knowledge I accumulated, everything helped me. And because I won and lost big amount in 2018, those days I learned how to make money, but I didn't know how to keep the money. But in 2020, by then I knew how to keep the money, what I made.
That is the utmost important thing.
Yeah. Then after that, I never had to go back and.
So you said that like 2018 was also like 1 year where after making a good amount of money, you again blew up.
Yeah.
So how did you take it? Like what was your thought process at that point of time? Because it has been already 6-7 years. So you found that, okay, this can be cracked. And somehow like you used to make money, you used to lose money, you used to make money, you used to lose money. And then 2018, that election time, like it gave you that confidence ki finally I have arrived.
Yeah.
And only to realize in the next couple of months, no, nothing. Like I'm at the exact same point, like I'm at square one.
See, I was disappointed, but still I knew I proved that I can make the money. So I just need to keep the money. I need to avoid
Keeping the money is the,
Huh.
the missing piece of the puzzle at
Yeah,
that point.
that is when I limited my capital. I'll explain in the later chat
Yeah.
how I did that and how it helped me. It is a very simple thing, but it is very difficult to do.
Most of the things in trading is simple, but they are not easy.
It is difficult to do. But once I started doing that, it turned around, and I paid off all the debts. I accumulated enough amount to buy a property or whatever. After that, my wife used to calculate all the debts, and every week he looks at all the car loan, home loan, personal loan, and everything. We have this much amount, this much salary. We don't have a savings, so it will take these many years to pay off all the debt. She used to say every week. She used to calculate that, and she will say, "Oh, when can we settle and all?" And one fine day, I told her I have a surprise, and she asked me, "What is that?" I said I paid off all the debts. She was like shocked. Then I said I was trading and I made money, and after paying off all the debt, I have this much money. I showed her the
Ledger.
the bank account. Then she was like shocked. She sat there. She could not even get up. So that was a unforgettable.
That moment makes everything worth it.
Yes, absolutely. So after that, I think I never had to look back.
What do you do now? Like, do you like predominantly buy options or do you sell options now?
I don't consider myself as an option buyer or seller. I consider myself as an option trader. So whenever I see that, okay, this is a good market for selling, I do selling, and this is a good market for buying, I do buying.
Okay, let me try to pick your brain on that. But yeah, let's go for breakfast. Let's have breakfast and continue your chat further.
Yeah, thank you.
So Shiju, once again, welcome to Breakfast with Traders.
Thank you.
And we have the perfect Kerala themed cuisine here.
Yeah.
I know only one thing out of this entire breakfast buffet. Like, I know only vada. You have to help me like with other dishes.
This is also vada, dal vada.
This is dal vada.
And this is called medu vada.
This medu vada even we have.
And this is banana fry, which is padampuri here.
Is that a sweet or is that a savory?
That is banana. Banana sweet will be there.
Oh, it's banana sweet. Okay. And this?
This is idiyappam.
Okay.
And the other one is appam.
This looks like vermicelli or like
it is in steamed only.
Okay. Which is your favorite?
Out of these, I think snacks are my favorites.
So let's start with the breakfast and we can continue our conversation. So Shiju, like I told this even in the introduction, like you are one of the most meticulous traders when it comes to methodology. Like in one of your other interviews, I heard you that you save intraday charts of last 10 or 12 years.
2018 onwards.
2018 onwards, like almost like 5, 6, 7 years of intraday charts, and based on that, you kind of guess like how the day is gonna be. So when did you realize that okay, this much meticulousness is needed in order to succeed in trading?
See, I was trying to find out what all things I can do to improve the trading. So out of that, then I saw that people are so fond of candlestick analysis. But if you take one day's candlestick, what you can see? You can see open, close, high,
and
low.
low.
You can see all of that. But if you break that intraday chart into like normal 3 minutes chart, you can see everything. Like you
Hmm.
can see at what time the price dropped, what time price priced, and where is the curve. All of
Hmm.
that you can see, right? So then I thought, okay, that will add more values. Then once I started plotting it day wise, like Monday, 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 Tuesday, Tuesday, Tuesday. That way, when I started plotting, I saw so much of similarities. So it doesn't mean that I can see that similarity and make a trade every day. But how it helps is when I look back into the charts, one thing is I can see if there is any similar pattern is emerging.
Pattern recognition
Yeah.
becomes a little bit easier.
Yes, that is one thing. And second thing, I can understand that, okay, how far the market can go.
Hmm.
Certain days when the market is moving up, 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 like from 9:15 to like 12 o'clock and all, when the market is going up, people say it is too much.
Hmm.
It can't go like this and it has to correct. But I have so much of examples where the market rallied right from the open till close, or market fell right from open till close,
Hmm.
or the extreme reversals. All these patterns we become more familiar and we can see that, okay, these kind of patterns are emerging. And third help is when the events are there, like for example the election or the RBI policy or any special announcement or data release or US related data release, we see that if you dissect the kind of news plus chart, you can see that the pattern we can recognize little faster.
When you recognize the pattern,
Yeah,
like do you go full throttle on the conviction or you still keep some room for error?
I keep the room for error because trading is always probability game.
Hmm.
But I can increase my probability or the positive outcome drastically when I look into all of these things. But it is not 100% error free.
Does your bet size even depend on the probability?
Yes,
So you have a mental model for
correct,
that.
correct.
Nice. So like how much impact did this saving of all the intraday charts? And I've also heard that like you go through all these charts on a regular basis.
Yes, I do that.
So do you think like it adds a significant edge to your trading?
Absolutely. Because what can happen in the market once you understand that is a completely different game altogether. Because people do overtrading. Why? They
Hmm.
think that this trade is going to make a huge difference. This is my trade and this trade cannot fail. That's what people think.
They get married to their trades.
They get married to the trade. That is when they are doing the overtrading. But when I look into the charts, I understand that, okay, what all things can happen in the market. Then I clearly make my mind in such a way that it's a probability game so that I can adjust my bet size accordingly. If it is very high probability, I increase very drastically. But if it is very low probability or if it is just a possibility only, then I avoid the trade or reduce the size drastically.
You're okay to be in a little bit of FOMO
Correct.
sometimes.
Correct. Absolutely.
Now tell me, like there has been a lot of regime shift, right? Like
Mhm.
2023, where the lot of zero DT mania started to kick in.
Yes.
A lot of regulatory changes started to kick in.
Huh.
The way the money flows into the market started changing. Now, your charts,
Huh.
your saving of charts, and you looking at all the 2018 post 2018 ka chart pattern, do you think it's still relevant in such a changing environment?
It is absolutely relevant because the help is completely different now.
Hmm.
Like I said, if there is an event or any special occasion, that time I can absolutely go and refer this chart and see how the market behaved.
Hmm.
Because those time it is difficult to control the market or manipulate the market for certain
Operate basically. It's very hard to
Yeah,
operate.
those times the market moves naturally and it gives the natural move.
Hmm.
So those times it is absolutely helping. But intraday wise, the pattern has completely changed.
Hmm.
And if I look into my chart, there were times when every Wednesday market keeps on falling after 1:30 to 3:30. Then every Thursday market keeps on rising.
Hmm.
Those kind of periods were there in the market.
Hmm.
And certain times it reversed. Like every Wednesday market used to give the short covering, and Thursday it used to give like moderate volatility only.
Hmm.
And there was 1 year, almost every Monday market was like bullish. It
Hmm.
was closing above the open level.
Hmm.
I think I have the chart collection which recognize that,
Hmm.
and so those kind of periods were there, but that is little less now. But if you see, most of the Fridays we are getting the volatile day and the trending day, right?
Hmm.
So that is there in everyone's mind. But how that volatility comes in, what time the market picks up, or if it is a downtrending day, what time the market falls more, all those I can see from my chart collection.
Hmm.
That is the difference. Little edge, extra edge.
Now you also traded alongside your job for more than 10 years.
Yes.
So this is something which a lot of the audience, a lot of the current generation, like who's trying to make it into the trading, they are kind of struggling with it because they have a full-time job and the markets have been volatile, and now every now and then we are bombarded with some regulatory changes. So how do you think one should approach trading as a side hustle alongside the job?
See, what I would say is if somebody is coming into the trading world, I would say until you know that you are successful and you can maintain the success, you need to have a separate plan or separate income source. And I could become successful because I had a job. I was losing in the market, but I was making money from the job. So whatever money comes in, I was utilizing for my learning and my cost in the market for becoming successful. So that helped me. And one more thing, I could take risk in the market because there are times if I'm not getting any money from the market, still I can survive on the job.
Hmm.
So that is the difference. But when you know that you need to survive on the return from the market, it is difficult.
Correct. And especially like if you're an option buyer, like your returns are lumpy.
Correct.
And what I mean by lumpy is you don't get consistent month on month green.
Yeah.
Some months or some quarters you'll be closing
Yes.
underwater.
Yeah.
And like most of the money for the entire year comes in like 2 or 3 trades.
Correct.
So how do you handle with that emotional state where like 7 out of your 10 trades are losing trade?
Yeah. So now I think I'm absolutely fine with it because it's been long time, right? I've been following this pattern for like at least 4 or 5 years.
No, now there is some sort of a historical evidence to your brain कि हाँ
Correct.
साल के end में इतना इतना होगा ऐसे ऐसे होगा. But how did you manage
So
to
it's all about
do it in your initial years?
it's all about the way I learned trading because now there is a mentor or a trainer whom people will be approaching to learn the trading and their style gets impacted, right? So what happened to me, right? During those times, I didn't know any trainers. I didn't know anybody who is profitable in trading or even loss making in trading. I just knew few people in the some of the communities. That's it. So how I learned trading is from the reading. I learned charts and everything from the Investopedia. Then I read a lot of interviews of profitable traders like Market Wizard book. Multiple times I read, and there used to be a lot of podcast with traders. Like now we can see a lot of podcast with Indian traders, like this one. But those times there was absolutely no interview with any Indian traders.
Tasty Trade was
yeah.
one like who came up with this.
But if you tune into the podcast, you could see a lot of podcast with the US successful traders. I used to listen a lot of with those traders interview like 52 traders podcast, and there are so many other. There was one guy, Brandon Clay. He wanted to become profitable, and he was not profitable, so he started interviewing the profitable traders every week, one trader, and their strategies and what he used to discuss, and the Market Wizard book. So one thing I realized from all these methods is only one thing, only one success mantra to the trading: cut your losses short, let your profit run. So that's all. That's what everybody comes in. Everyone is zeroing into that particular point.
Yeah.
So I wanted to know how can I run the profit, because what happens is whenever I try to run the profit, 3 out of 4 times maybe the winning trade comes into the losers. But some of the trades I used to get good winners also. So then I had to cut the losses short. That took a lot of time because even after I started running the profit, I was not cutting the losses short.
Talking about cutting the losses short, especially in the current scenario, you are one of the traders who has a unique way of buying options. You don't have system stop loss or something.
Correct.
Like you manage your risk
Yeah.
from your options exposure, long option exposure.
Correct.
So can you just tell me briefly about that?
See, one strategy that which I feel very good is it is up to everybody whether they want to follow or not. It is like, let's say you are trading with 100 rupees, your capital, 100% of the capital, and in an option buy trade, if you are okay to lose 2% of the capital in a bad trade, extremely bad trade, if the worst outcome comes in, you are okay to lose 2% of the capital, which is standard acceptable one, right? And if you have a good system, up to 1 to 2% people are okay to lose in a very bad trade. And in a usual case, if it is a bad 1% and extremely bad case situation 2%. If that is the case, in an option buy trade, I am ready to take a trade up to 3% of my capital. Because if I take a trade for like 100 rupees and if it is not an expiry day, and
Do not let it go to zero.
if it's not an expiry date, it is not going to go to zero. And in extreme worst case, mostly what I have seen is from 100, it goes to like 30, 40 rupees. And in normal case, I'll be exiting like 90, 100, 110, or even 50, 60. Those are the typical exit if the trade doesn't work. Sometimes it will be even small profit also. 100 entry, 110, 120 will be the exit. Still, it is a failed trade because it is not working the way I wanted. Extreme case, it will be like 30. So out of my 100% capital, even if I am risking 3% of the profit, extreme worst case, I will be losing 2%. But normal case, it will be like 1%, 0.5%, or it will be mild loss only. But what happens is when the trade works, if the trade works exactly the way I expect, which happens maybe 20% of the time out of 100 trades, that time this three rupees or the 100 rupees option, it goes to 300 rupees, 400 rupees, or 500 rupees. So I'm getting like on the risk amount, I'm getting maybe
multiple.
three multiples. So if I'm risking 3% of the capital, I'm getting like 10% of the return on my overall capital. So that can fund me for another maybe 10 or
15
so
losses.
so many trades, right? That is how it is.
So just like many option buyers that I know,
Hmm.
you also don't keep your entire net worth in trading account.
Correct.
So what is the numbers? Like what are the numbers? Like how do you allocate the risk as a percentage of your trading capital or percentage of your net worth?
So based on my net worth, I don't keep the trading capital because net worth and trading capital both are different. So trading capital for the last couple of years, I haven't increased much because I am at the optimum level where I can trade peacefully. So out of the total trading capital, approximately 10% is what I keep it in the trading account, remaining in the savings account. See, out of this 10%, uh, based on that amount, maybe half of that amount or 20% of that amount, that is what I usually trade, take in a trade, or even 10% of that amount. But in some cases, if the conviction is extremely good and if the market is offering a very good trade, I risk the entire 10%. So if the trade blows up, maybe I can lose around
10%
7% of that overall amount, or
Overall
70%.
trading capital.
Yeah, 70% of that 10%.
Okay, that is basically 6 to 7%
Correct.
of your trading capital.
Correct.
Which is again a certain portion of your net worth.
Correct.
So this is something. This is some amount, some different risk management that you have set.
Yes.
Correct, because generally, like when people say that, oh, you have to risk only 1% of your trading account and 2% of your trading account, then my question is like, how big is the trading account compared to your net worth? Are you?
That is
You-
also again around 10%. So
Hmm,
so what I'm risking could be like 2 to 3% of my overall net worth.
correct. Yeah.
Whatever. Yeah.
So in the end, like everybody kind of zeroes in on that particular number. Okay, whatever net worth you have, like you should not be risking more than 2 or 3% per trade.
Yeah. But when I built the wealth, it was not like that actually. I didn't have much net worth and I was operating in this way. But as and when my net worth increased, I didn't increase my trading capital proportionately. So my numbers came into the optimum point.
Correct. I mean, that's always the case, right? Like there is a place in life where to, take the risk and make it big. And after some point, after reaching a particular point, when you have something to lose, it's about, not losing.
Absolutely. And that is the importance of having a job. I could risk higher amount because I had a job to fall back on. So even if I make a little bigger losses and if I run short of money, then I had the job and salary. That is the reason I was able to take little higher risk.
Now that you don't have the job and now that you're complete,
Correct.
the only source of income is trading, now you have become conservative.
Yes.
Now you told that you have reached a place where you are not increasing your trading capital, where you consider this current trading capital is your optimum.
Correct.
So did you push further and felt uncomfortable and then you came back, or you kind of by empirical evidence you took that, okay, this is the right?
See, what I do currently is if I have a winning streak, let's say today I made some good amount, so I keep a little portion of the profit into the tomorrow's DECA, little higher amount I will be trading. And tomorrow also, if it's a very good day or big profitable day, I will increase my exposure a little more. So as long as the winning streak continues, I keep on trading with a little higher exposure.
So your money management also is kind of trend following.
Correct.
Yes, you capitalize on the momentum.
So when I am into the peak, yeah, it is little uncomfortable, but it is on the back of a recent cushion of the recent profits.
Yeah.
And from there, what happens is if I make a loss, then I come back to the original size. But from the original size, if I keep on making the big losses, if I make a big loss, the next day I'll be trading with a little lesser capital. One more big loss, a little more less. But again, big loss. I may take a break and I may cut down drastically and restart again.
When was your last trading break?
I think off late, last few months I didn't have a break, but in 2023, I think I took multiple breaks. 3-4 breaks I think I took overall.
That was the time when you're a full-time trader, right?
Yes.
And when you're a full-time trader, there is always this inclination to check the charts and look at the markets. And sometimes, even when you're on the break, you might find some patterns
Huh.
which are like high probability in your book.
Huh.
So even when you find a pattern when you're on break, like do you break that discipline and
So
put
my
some
break,
amount of trade?
my break is hardly like 2-3 days or hardly a week. That's all. And even during the break, there'll be a very small account where I'll be taking very small trades, maybe 1-2 lots, which is like very minimal compared to my
Just to be in sync with the market.
Yeah, and I watch the market, but my bigger trading accounts will not have the capital there. I withdraw everything and I don't risk big amount. So break means it's not a complete 100% break, but I will avoid all the big trades and it's very minimal, very small nominal trades.
Even if the loss happens, it's like you
Yeah,
can just
correct.
dust it off.
Correct.
As an option buyer, you also thrive on momentum.
Yeah.
But one unique style that I've observed in your trading is you add the quantities during pullbacks.
Correct.
Correct. So when the pullbacks come, generally, let's say like you have a certain amount of position and the market starts moving in your direction.
Yeah.
And then obviously like your gains would have, your mark to market is in good green. But when the market gives a pullback, generally the mark to market also comes back. Maybe like from good green, like you might come back to cost. Now at this point, you need to add further size if your bias is in the same direction. Now this is something which I cannot do. The moment my mark to market starts to decrease, I'll start to cut my position.
Okay.
But like how do you do that? Like how do you add size on the pullbacks?
See, first I try to judge the market. Is it a reversal day? Is it a trending day? Or is it a sideways day? And if I judge the market as it is a trending day, then every pullback, I keep an invalidation point, which is mostly the prior swings. As long as the prior swing is not getting broken, on the rally and every pullback, I'll keep on increasing the position. Because like I said, up to 100% of the deployed capital or per day capital, I deploy in some of the trades, right? But I don't do it at once.
You enter in tranches.
Because mostly I'll be deploying like 20%, 30% of the amount that I can deploy. But as the market moves in my favor and as I get more and more conviction that it is going to be a trending day, then instead of where to book the profit, I'll keep on thinking where to add more into the position.
What about like sometimes, the market doesn't give pullback, like suddenly like it goes in one single line and then it starts to move in a parabolic fashion. So do you add into the breakouts also? You specifically wait for the pullbacks to add the further size?
Mostly I wait for the pullback. If there is no pullback, there are times I had to sit with the original position, and there are times when the market was giving the indication of the trend and it kept on going. I was in big green. Big green means unimaginably big green, and suddenly market gave a big drop. If it's a bull trend, if it is keep on going like this, suddenly one single drop, it went to the day low, and my entire profit came into the red. That's a part of trading, because the way I trade, that is a part of trading. It cannot be avoided.
So one thing is that like you are not too bothered about SL hunting and operator driven issues and stuff like that, because you don't have system SL in place. You have a particular invalidation point.
Correct.
Now, have you done this analysis? Like if you trailed your profits using system SLs, like if you, or especially those kinds of days where the market is in your direction and suddenly it tanks, taking all your gains and converting that winning trade into red. So do you feel that, oh, now probably it might be a time to use system stop losses?
I thought of it, but every time I found with my trading style, that is not the ideal way. Means there are some people who trades in a different way. System stop loss will be the better risk management. But for my trading style, that is not. Because when an option goes from 100 to 1000, from 500, it may come to 400. Then again, it go to 600. From 600, it may come to 500. Then again, go to 700. So it's not a smooth journey. So if I keep on, if I keep a system stop loss, it will keep on hitting and I'll be kicked out of the trade. But if I have a proper invalidation point in the market, then I can sit in the market as long as that invalidation point is not hit. And one more thing, when you trade in this way, you will never book the profit, the highest profit you have seen on the screen. Maybe you have seen, you have taken a trade at 100 rupees.
it went to 500 rupees, but your exit may be at 300 rupees.
Yeah.
That happens always with me, and you have to live with it, and you have to understand that that is a part of this kind of game.
Now, did you ever in your trading journey think that, okay, since now I don't have a job, probably I need to switch to some trading styles which give me less lumpiness in my equity profile, where like I have steady source of income, like something like wall trading.
Okay.
Generally, wall trading is known for its steady smoothness of equity curve.
Okay.
But when you go for long gamma or long option trades, generally they are lumpy.
See, there is one thing that I previously told also, not here. I started trading for money, but the moment I stopped trading for money, I started making money. That is irony with trading, right? If you keep on trading for money, you will not make money. So by the time I quit the job, I had enough savings to take care of my life. So I don't have to rely on the trading profit. So the money I'm putting in the trading, I'm just seeing it as a score. I don't have to worry too much about making some money out of that for my day-to-day life. So I'm okay with the volatility as long as it is not hurting my financials, as long as it is not hurting my psychology.
Was this a gradual transition, to stop looking at money as something with utility, with the value of utility, or it's just basically just some score for my game?
It was a gradual transition, but I had to put in a lot of conscious effort to become like that.
What did you do?
I told you, right? I read all of these books, and every successful trader is saying in that way. Then I wanted to train myself in that way. I did meditation, guided meditation. All during that time, I'll be visualizing that I trade without looking this. Then I always, after taking the trade, then I started looking at the chart and stay away from from looking at the P and MTM screen. All of that I put in a lot of conscious effort to become like that.
My trading is exactly ulta of yours, because I trade my MTM.
Yeah.
Most of my trading decisions depend on like how my MTM is doing.
Correct.
Because that is my homing beacon. Like if my MTM is increasing, it means that I'm doing something right. So either I'll add the size or whatever it is. And since I trade walls, I need to have a bias on the wall behavior as well as on the bias towards the market direction. So if one of the bias turns out well, the trade will be afloat.
Yeah.
If both bias go against me, then only the trade turns negative. So I basically trade the mark to market. So in your case, you don't even look at the mark to market because you have a fixed level of this thing. And this is something fascinating because every successful trader, they never trade for money. For them, money is just a score. It's just a score on their scoreboard.
There is one change there. Money is needed. And every time when I make good money, I buy something for me as a gift. All of that I do. But while trading, I don't care about money. Because making more money in trading, it is always happy. And I like to make more money in trading. But while trading, money is a byproduct when you trade well. Doesn't mean that money is not worthless. Money is worth.
No, but you can't look at money as something which has some utility in your life when you're trading.
Yes, absolutely.
When you're trading, it's just like moving. It's just a moving number on your screen.
Let's say I made a 50,000 loss. Then I am thinking, okay, if I had this 50,000, if I didn't lose that 50,000, I could have done this, that, and all. That is not the right approach. And if I make 50,000 and it is showing on the screen, oh, today evening I'm going to withdraw this 50,000 profit. I'm going to do this, that, and all. It is not going to work. So you have to detach from money while trading. That is very well needed for making the real success in the trading.
So this is what I call the actual gamification of trading.
Correct.
You have to treat trading like a game.
Yeah.
And all this MTM fluctuations
is a score.
It's just a score. Yeah. But people do ulta. When they are spending money in real life, they don't look at utility.
Yeah.
But when they're trading, they look at the utility of that money.
Correct.
But it has to be the exact ulta.
So successful trading is completely opposite to the natural human
tendency. Yes, absolutely. So, Shiju, you're one of the people like who are both good at option buying and selling, and you seamlessly transition between the two.
Yeah.
So, what percentage of your trades are from the sell side and what percentage of your trades are from the buy side?
Maybe around 80% of the trades are in sell side and 20% is the buy side. But if you look at my profit, maybe 90% of the profit is from the buy side and maybe 10% of the trades in sell side. The reason being, I keep a day cap, right? I use only the day cap for option selling also. So with the same amount, the amount of options that you can buy and sell is completely different, right? Yeah. So, and sell side, there is one more thing. The risk is unlimited. You keep the stop loss, you keep the hedge, whatever, but still, after a point, it is huge. Like I buy an option for 100 rupees. I know by end of the day, everything goes wrong. Even if it is an expiry date, it can go to only to zero. I lose only 100 rupees. I sell an option. What happens? Probability is high that I can make money. But what happens if the trade goes wrong? It can go to 120, 150, 200, 300, 500, 1000, 2000. It can go to any level, right? So
No,
that is the
that's
difference.
what is
Because of the,
happening
yeah,
over the last couple
correct.
of years now. Like especially like people who use algorithms and
Yeah,
who use systematic approach, who have come into this zero DT regime. Most of the flows has been from the short option side,
correct.
and we have been seeing like the market's volatility, where like every day at least one option goes 10x and comes back.
Yes.
So in the last year, like how much of your trading is from short options and how much of your trading is from long options?
Approximately same.
It's the same.
Yeah. Approximately.
Hmm.
Because I don't keep a proper track of buy trade, sell trades and all. But based on the pattern, I know it will be approximately 80% sell and 20% buy.
When do you sell?
I sell first because once the market opens, if it is not giving any proper trend-based move, then I make at least a 9 corner start of the day. Then I sit on that because that will take away the urge to take a trade.
Yeah.
So I'll sit there. I'll aram say look for the patterns or a trending day or whatever. Unless that proper trade comes in, I will be sitting on the iron condor. And the best indicator is my iron condor goes to loss. I'm the most happiest person on earth when my iron condor gives a loss. Because if the iron condor or short strangle is giving a loss, that means the market is beginning to become wild and it is going to trend and I can look for the option buy trade. I just cut it out completely. Then I look for the option buy trade then. If the iron condor is keep on making the profit, I'll just sit there. End of the day, I'll enjoy very small profit.
Very small.
But if it is giving a loss, I'll happily cut the loss.
But
and
you're subconsciously you're hoping for the markets to blast in some way, right?
Correct.
So basically, this is like your test quantity.
Yes.
It's like a
Yeah.
Trojan horse.
Correct.
So you just let that test quantity there, and if it does well, it means that the market is silent and you don't have to do anything. And the moment it starts to lose money, that is your indication to go big on your option buy trade.
Yes. Even in buy trade also, I first take very small trade. Then I watch the market. If it is behaving the way I am expecting, I'll keep on adding. And after, if it is giving a good blast or good move in my side, then if the trend is sustaining, then every pullback I'll keep on adding until this full quantity based on my cap requirement is met.
So what is your definition? I mean, what do you look for a trend? Like, do you trade the breakouts or do you trade the reversals?
I trade the breakout 90% of the time. Reversals I trade rarely. Even if I trade reversal, it will be like option sell trades or very mild quantity option buy trades. And because I don't have a conviction as to where the market can go. Yeah, reversal trades are good, but for my psychology, it's not suiting well. And breakout, I can clearly recognize how it is breaking out and how long it is sustaining. I have the defined rule, how long it needs to sustain after the breakout, then where all I can add the quantity. So I'm very comfortable with the trading breakouts.
Do you trade after the breakout or do you try to enter before the breakout?
Certain times, if the market is giving some good indication, I will enter very small quantity before the breakout. Then after the breakout, and if it is sustaining, I will keep on adding. And most of the time, the problem with many traders for adding to the winners is, like I said, if I buy an option for 100 rupees, later when I want to add the quantity, it will be at 150 rupees. I bought something for 100 rupees. I want to add more quantity. Buying more at 150 rupees, it will be
Doesn't
very
feel natural.
uncomfortable.
Yeah.
Even I have that issue. So what I do is I go and pick the next strike. So that will take away the mental block.
Everybody has their own way of coping.
Correct.
Yeah, because like pyramiding is something which is probably, I would say, the pinnacle of trading, where like you have to have that guts and you need to have that conviction to add into your winners.
Yes.
Probably I would suggest that like if you are good at pyramiding, probably you have arrived at trading.
Yes. And for pyramiding, one book that I talk about this book everywhere, that Best Loser Wins by Tom Hogarth. Repeatedly reading that book helped me a lot to improve my pyramiding skill.
Nice. But you don't pyramid on the same strike?
Mostly I don't.
Now, how has the volatility, expiry day or zero DT induced volatility over the last year, how has it affected your trading?
Actually, zero DT volatility did not impact me because I was mostly avoiding the zero DT trades. But at times I used to take the 0DT trades also, but there I got stung because of the non-volatility. Because last year, if you look at, there were two kinds of market. One, it will keep on going smooth and suddenly it will give you blast either side or both the sides. That is where most of the people got stung. But I got hit on the other market. Market keeps on moving and it keeps on trading in small range and expiring
The
at a
volatility contract.
small range. It is going to expire, right? So that kind of trade days only it got impacted me, because previously I used to take the consolidation as an indication for the next breakout. Let's say market gave morning Nifty rallied 100 points, then it is consolidating near the day high for very long time. So typically in a normal market, it's
Higher
a
probability to break out.
breakout. So those kind of trades I used to take a lot. But in 2023, after the daily expiry started, all these trades started failing, because I take the trade, market doesn't move, it goes and expire the exact same place. That premium keep on decaying, and if
It
is
goes to
OTM,
its last final 10-15 paise.
yeah, if it is ATM or OTM, it keeps on going into zero, and if it is ITM, the entire premium vanishes and only the intrinsic value left. So that's where I got hit. 2 to 3 times I got hit, then I realized this is a different game, then I
But
avoided.
2024, especially 0DT trades are a boon for option buyers, right?
2024 it was fine. 2023 I'm talking.
So how's
Second half-
2024?
2024 is amazing year for me. It's superb.
Like you made a lot of money from 0DT?
Not 0DT, but other. If it is 0DT, if Nifty is 0DT and Nifty is moving, I take either Sensex. Otherwise, I go for the next week options. If in Nifty is 0DT and if it is offering the volatility, I go for Bank Nifty. If Bank Nifty is 0DT and if it is offering volatility, I go for Fin Nifty. There'll be some deviation in the move,
Oh, that's
but
fine.
it's okay. I can live with it.
You need to capture basically you need to capture the delta.
Correct.
But do you think like if you traded the same kind of system using 0DT instrument where like you have so much of gamma movement, and in second part of 2024, last couple of months, you can get the wall benefit also.
It is right, but it was not suiting my psychology for a bigger trade. For example, last Friday, Sensex and Nifty blasted, and Nifty Thursday expired, and it was just Friday. Next expiry started. So the options that I took for 100 rupees, I exited for 300 rupees, and option I took for 70 rupees, 270, I exited 250, 270 rupees. All those were very good trades. But instead of that, if I had taken a Sensex trade for 100 rupees, I could have booked the profit at 1000 rupees by holding the trade for the exact same time. But the difference is, let's say in Nifty, I'm comfortable taking 10 lots. In Sensex, I will not be comfortable taking 10 lots because it's a same day expiry. Not even one lot I will be comfortable.
Because you consider that the entire premium as your risk.
Correct. Leave it alone. Instead of one lot, 10 lot, even if I take 1 or 2 lots in Sensex, it would have been more profitable. But the other side of it is, Nifty, after buying for 100 rupees, I was able to sit through the trade and ride it
through
through
the
the entire volatility and make it to 300, 320 rupees. But Sensex, even if I buy for 100 rupees, same day expiry, when it becomes 200, 300, I will not be able to hold because any adverse move will make it zero. Nifty, I bought it for 100 rupees and it went to like 250 rupees. There was a good correction of like 100 rupees intraday. From 250 rupees, it came down to like maybe 190 rupees. That's all the correction happened. Still, what I bought for 100 rupees, it was at 190 rupees, right? So I could sit through that.
But the 0DT options would have gone to zero.
It may go into zero if it doesn't come back up. So it's personal choice and it is psychological comfort.
So tell me, like we talked about this correctly. 90% of your profits come from option buying.
Yeah.
So your money that you make from trading is kind of seasonal, I'd say.
Yes.
So what was your biggest dry spell? What was your biggest drawdown period?
2023.
23.
Yeah.
The entire year.
The year was slightly down. The entire financially, if I take, it was slight red only.
So the year you ended in red.
And ended in red, but that was slight red only. But the difference was, there were like May, June, those 2 months were horrible because that is when the pattern changed. Until May, the pattern was okay, I was in green. May, that 1 month, the pattern changed and I could recognize that only after 3-4 very bad trade. So that hit me badly. After that, there was no opportunity. Then the whole year I was sitting there trading with very small capital. I was not getting a good trade. It was going that way until the December state elections. State election market became little volatile, and I got some good trades. And then the financial year entered. New financial year started. Still, it was like okay only. But June, when the our election the central election started, that time the huge volatility. That 1 month, not even 1 month, that 1 week.
I know about your election day trade. Like, explain about that election day trade.
The prior day also I made money, the exit poll day, and election day when the market opened itself, it started sliding. Then I found that okay, it is trending, and it was because I had all the charts and scenarios of the previous elections and everything, and I had all the notes and journal. But then, based on my experience, I felt that okay, it is going down. And immediately after opening, I started buying put. So premium was exorbitantly high. So what I bought for 300 rupees, after few minutes, it was going to like 600, 700, 800 and all. Then immediately I bought, I think Bank Nifty 42,000 was the lowest option available in the option chain.
Oh my.
I bought that for 8 rupees or something. And 45,000 or something, that was trading at 12 rupees, 13 rupees. It was like 3,000 difference, but that was also trading at 45,000 to 44,000. That was also trading at 10, 12 rupees. I bought that also. Not huge quantity, small quantity I bought it. And when the move continued, that 10 rupee, 8 rupee option, that went to like 150 rupees and all.
But this phenomena happens on a daily basis in expiry. You remember, like
that is only the what to say, 100 points, 200 points out of the money, right? This was like Bank Nifty opened 40,000, 49,000 or something that day. This was 42,000 option.
See, that is predominantly a hero zero kind of a trade.
Correct.
Correct. Now,
but I had the proper trade at the money also. At the money option, 300 rupees, 200 rupees, 100 rupees premium options I had.
See, I'm just trying to be a devil's advocate here. So why can't you do it on a 0DT where the probability of any option practically like 5xing and 10xing is very high probability in the current scenario?
Yeah. Practically and logically speaking, that is the right thing to do. But I haven't evolved to that level wherein I can sit through the volatility of a 0DT, because when I have a very good trade from 100 rupees to 500 rupees, I'm okay for it to go to 400, 300 rupees. I exit it, or even 200 rupees when it comes in, I will exit it.
But the number of opportunities that you get is very high, right?
That's what. I'm mentally still not ready for that.
Okay. So is it the next step of upping your game this?
I do that. I do with small quantity. This expiry, I didn't do that. But previously, I think November 22nd and all, there was a huge trending day. That day I had, that was also Friday. That day I had Nifty, Bank Nifty, Sensex also. Sensex, I had a very good trade. But maybe 20% of the overall trade quantity was Sensex. I had a good ride. So similarly, I'm trying that, I'm doing that with small quantity. But eventually I want to do that with more quantity.
But now though the expiry day scenario is gone, now we are back to 2022 regime where we only have...
even better.
This is even better?
Because when there is a daily expiry, every Tom, Dick and Harry will be familiar with expiry day patterns and moves. Because Monday you have an expiry, Tuesday you have an expiry, Wednesday expiry. Everybody will be knowing after a point, after 3-4 months, everybody will understand what happens on the expiry day. But when expiry is only on 1 or 2 days in a week, people will keep on forgetting. I don't forget because first of all, I have a good memory. Second, I keep the chart, I keep the journal. Whenever something special happens, I keep a special journal and I keep on referring that frequently.
So you think 2025 is going to be a better year for you?
I expect.
You expect?
Yeah.
Who do you think this
2025
regime
you are asking, right?
Yeah. Who do you think this regime shift is going to help? Like, is it going to help like option buyers or option sellers?
It is not buyer or seller. It should help both kind of traders who are trading sensibly with trend.
Basically, trend following will again emerge.
Correct.
What you're trying to say.
Yeah, exactly.
Great. So, is that election cut trade your best trade so far?
No. My best trade, the one I liked was there are 2 trades that I can talk. One is in 2018 somewhere. So those times my capital was not big. So those times there was a pattern. Every Wednesday market comes down and it gives a drop after 1:30 to 3:30. It gives a drop. And Thursday market, those kind of days mostly market opens lower gives little more fall, then it gives a trending on the upside. So multiple times I had seen that. Then I thought, okay, I need to catch this kind of trade one day. And I kept on waiting. And one particular day I saw Wednesday markets fell like anything after 1:30 till 3:30 it fell. Next day market opened nearly flat and it went down immediately, then started coming back. Around 9:45 it started coming back to the day open.
What's your confirmation? Like when the market starts to come back, do you wait for the day open to be taken out or?
Yeah, mostly. So it was coming near the day high. That time itself, I took the position with the entire day cap, whatever I had, and the entire day. Remember, it was even before becoming a properly profitable trader. But during that day, I was able to sit through the entire day. Whatever I bought for maybe 30-40 rupees, I was able to take it to 150 rupees or something. And I think my day cap became 5 times because I deployed the entire money. And my money management was poor that time, very pathetic. Because of that, I
if
got
the market didn't move, you would have lost your entire capital.
the money that was in the trading account, I would have lost the entire amount.
Was it an expiry day?
It was an expiry.
It was an expiry.
Yes, it was a Thursday. That is one good trade. Money wise or the amount of risk that I took, I still say it is a bad trade. But the way I took the trade and the way I sat through the trade the entire day, that was the good moment. And
how did you feel after that trade? Like, did you, because the trade worked out in your favor,
Yeah.
that I agree, and you must be like exuberant.
Yeah.
But did you recognize at that point ki, oh, I went overboard my risk?
Yes.
Did you recognize it right then and there?
I recognized it.
And
So one good thing is I had the job that time, so I was little okay with that.
okay, so it was still a conscious decision.
Yes, but I know it was bad and I shouldn't have taken that much risk.
But you still rate it as your best trade.
Because of the way I sat through the trade for the entire day that time.
When were you able to replicate the same kind of holding power later? When was the next
Later, I
trade?
think from 2008, 2019, 20, I did that multiple times. But after 2020, I was able to do that consistently. And second trade, one more good trade is there. That was 2021, I guess, 21 or 22. 37,500 was constant resistance for Bank Nifty.
You remember the levels as well.
Yeah, every time it goes to 37,500 and it was getting sold off. So there is a pattern for the market. If there is a very tough resistance or support, it gets broken either on an expiry day or through a gap up. So I kept on waiting for expiry day, and expiry day market opened a little gap up. It was 36,900 or something closing, and it 37,100 or something it opened. Then I thought, okay, today it will take out. I started taking some trade, but market dropped to 36,900 and I lost some money. I just cut it down. Then I waited, but market started coming back up. Then I took, first I took 37,100 call. And then I realized, okay, it is not slowing down. I thought, okay, it is going to break 37,500 today because it's an expiry day. As per pattern, it is high probability. And when I looked at 37,500 option, it was just trading at 9 rupees. I started buying good quantity because that time my money management was proper. The money in trading account, that was small portion of the entire capital. So one trading account, the entire amount I loaded with 37,500 calls. I got at average price of 11 rupees. And that trade went out of the world. And I think that day market closed about 37,700 or something.
Damn.
And my option, the one I loaded at 11 rupees, I closed around 126 rupees or something. And so that trade went out of the world. Whatever I loaded at 11 rupees, I was able to book about 120 rupees, 126 rupees or something. And even the ITM I bought for 100 rupees or something, I don't remember the price. That also I was able to exit a good price. And the amount of profit that I got, it was about 5-6 times of the total amount in the trading account. That was a massive amount, massive profit during that time. And that was also one of my best trade. That day, even the risk management was also proper because I deployed only what I can afford to deploy.
Okay. So we talked about your best trades.
Yeah.
Now tell me about your worst trades.
There are way too many, but I can explain a 2023 incident. So the first day, it was back-to-back 2 days losses. The first day it was okay in terms of making loss on that particular day because on an expiry day I used to have those days I used to trade on expiry options also. Recently only I said 0 DT I'm not trading much, but those days only Thursday expiry was there. I used to trade expiry also. And that what happened was market used to give us some good pattern on an expiry day. I recognized that pattern. I started making the trade. I started taking the position, but market was not moving in my favor. The premium kept on eroding. And one thing that I usually don't do, I kept on doing that. I kept on averaging. And in my mind, this is one of the good opportunities. So I should make use of it. I was successful.
Now, again, you talked about averaging, right? Like you adding quantities during the pullback is also a sort of averaging.
But it is again after it is adding to the winning position only. So that is the scaling or that is the pyramiding.
Yeah.
That's pyramiding only. That's not actually averaging. Averaging means averaging down.
Averaging down. Okay, when the market is going against you, you started adding size. Not on the pullbacks.
Yeah, I started averaging. I kept on adding the position, and my day cap exhausted, and I committed another mistake. I added more money and I took the trade. Way beyond my normal daily risk. I kept on adding the money and I did. And the entire option went into zero. I lost a big amount on that day, way beyond my normal risk. And that was one of the bad trade. The biggest problem did not end there. Because usually if I have a very bad day, it is okay. By next day, I'll come up and I will do the normal trade and cut down the size and take the small trades. But what happened was because that day's loss was too big, I did the revenge trading on the next day. And that was even bad because I bet on the call long on the previous day. Thursday, I bet on the call long. Market kept on going down and my options ended at zero. Next day, market opened gap up. From there, first 15 minutes, market shot up very heavily. And I could not digest that because the prior day I was sitting on calls, market was going down. My option went into zero. Next day, market opened gap up and it blasted like anything without me in the trade. I was like completely lost. Then what I did is around 10:30, I went and bought call option huge quantity way beyond my normal exposure. So that was after market rallying substantial amount of length. Yeah, points. Then the market did a normal pullback after that. Even in normal pullback, I had to suffer a huge loss because my position was huge. And that pullback was normal only. I got scared because the loss was big, right?
And it was adding on to your previous day's loss.
Yeah, I booked the loss. And I shorted the market. After the pullback, market again went up. I made huge loss there also. So putting these days together, almost equal amount of loss. I made a very big loss. I think before that and after that, I never made that kind of loss. And that kind of bad trade, for the last 2-3 years, I think that is the only instance that I traded that way. My psychology was completely damaged.
So after these losing trades, did you speak to anyone? Did you tell this to your family?
I didn't tell anyone.
You didn't tell anyone?
No.
So maybe the first time you're telling?
Maybe I didn't. I think even in any of the interviews or podcasts.
So this is the first time you said it?
So since you asked about the bad trade, I told you.
And how does it feel now?
It is okay.
You feel light?
No, I came over it.
Came over it.
To a couple of my friends, I told that later, after maybe so many months, I told some of my friends. But I didn't tell the magnitude of the loss, but I said I lost big amount. But the amount of loss that I incurred, that was huge.
What did you do to cope? Like probably like give me the brief description of like how your next 1 week went after that.
After that, I took a break and my friends surprised, you had only 2 losing days. Then why are you taking loss? That's what they asked. Because after 2 losing days, I usually don't take break. Maybe after 3 or 4 or 5 losing days, only I take the break. After 2 days of losing trades, when I took the break, they were surprised. Why are you taking break now? You didn't do bad. It was just like normal trade went wrong. Then that time I didn't tell them. But after a few months, to few of my friends, I told this is what happened. I took a break. I traded with a small quantity. Then I came over it. But by then the market changed, so I was not getting too much of trade opportunity. That was the reason that year entered in loss.
Because of those 2 blunders.
Yeah. And still my overall loss for the year was maybe around 20% of that total amount that I lost on those 2 days.
Oh.
Because otherwise I was profitable.
You know, this can be a very good example of how brutal trading can be.
Yes.
Like you can do everything right for 360 days and you do like one thing wrong for 2 days and the entire effort of 360 days.
Yes, it happens. We are humans and we make mistakes.
And see, the thing is, like, if this had happened in your early days, probably you would have dusted off and say that, oh, I'm still learning. But this came when you were in the eyes of public, like
Correct.
when you were trading live.
Yeah.
Because I remember, like, we met in 2022,
Huh.
2022 Traders Carnival. We
Yes.
traded live together on
Yes.
stage, remember?
Yes.
So after that, like, it came as a surprise to you that, oh, even after, so much of trading experience and calling myself a professional trader, I can err.
Yes.
And I can err to such an extent where, two bad days can, completely wipe off my entire day gains.
Yeah.
So what triggered and what kind of, radical changes that you made after that?
After that, I decided that the beyond my days risk tolerance, I'm not going to do no matter what.
So what is your kill switch?
There is no kill switch. The only thing is I need to add money from the savings account to trading account, right? So whenever I want to add more, then it triggers me.
It reminds you of that day.
Yeah. Because if I keep all the money in the trading account, whenever I want to increase the quantity, I can just punch in the quantity and increase. But here, when I have a limit, if I want to increase the quantity beyond the limit, I have to open the trading terminal and add cash, go to the banking website. There was a kill switch, I forgot to tell you, because most of the brokers, it is independent brokers. But one broker I was trading was the broker associated with their banking sector. So I had the main bank account there, and the broking is also there. So whenever I want to increase the quantity, I can just allocate the money and trade it. I don't have to add by punching in the username, password, OTP and all. I just need to allocate the money. So that broker, it was difficult to take big trades in their platform. I had a Go Charting subscription. I linked it to Go Charting, and Go Charting there is a one-click option. So I used the one-click option to load big quantity in very short time frame. So after this incident, what I did was I closed the Go Charting subscription. So even if I want to take a big trade with this broker, I had to spend at least 30 minutes to load that kind of big trades.
Basically, like how they say trading has very low entry barriers.
Yeah.
If you want to survive in trading, you have to come up with your own barriers so that you don't end up self-sabotaging.
Exactly. Then later, I closed that that broking account also, because I don't want to trade beyond a quantity. So I closed that broking account also.
Like, how did you spend your time, like, when you took the break? Because when you take a break, you constantly brood over the same scenario that keeps playing on in your mind. So did it happen?
I didn't have any public interaction during the break time. And with one very small trading account with very minor quantity, I was trading mostly option sell trades, so that I can see some green on these days on the screen.
To just get your morale back up.
Maybe if it is 100 rupees or 10 rupees or whatever, it doesn't matter. So keep making some green, so that my morale will be back and I can trade normally after that. So there is a saying, a trader is only as good as his last trade.
Yeah.
So 2 trades I made enormous amount of loss. But when I took the break, 3-4 days I made small profit, maybe 100 rupees, 1000 rupees I made profit. So I'll be happy. I was back as a profitable trader psychologically. Because even though that loss was too big, it did not dent my financials because I had enough backup.
If you don't mind, can you tell me the exact number that you took on that?
I can tell you off camera, but not on camera.
Okay. No issues. So Shiju, it was a wonderful conversation.
Thank you. It was a nice experience. With this much of effort and this much of preparation, I have not seen anybody taking or shooting the podcast or the traders interview. It was a nice experience.
Yeah.
Thank you for inviting me.
Grow has done a tremendous job of, like doing all this, the entire production team, everyone.
Yeah.
So the only thing is that we hope that the entire series be taken in the right spirit and people be motivated towards, taking up trading as a full-time career, but in the right way.
And I have a disclaimer too. So whatever I shared here, it's all my personal opinion. Plus, it's all what is working for me. Doesn't mean that it has to work for somebody else, but it may help somebody who is aspiring to become this kind of trader.
Yeah.
So everybody has to find out a trading style that suits their psychology and their trading style.
There are a million ways to make money. Like you have to find yours that suits your temperament.
It took 6 to 7 years for me to arrive in this method, and last 3-4 years, even after making money, I keep on refining it. So it may not suit somebody else. Somebody else may find it is stupid or it's a completely different ball game. But some people will find it helpful. So
see, the thing is, if everybody thinks that what you're doing is right, then everybody will start doing
Correct.
what you're doing.
Correct.
Then that might not be an edge anymore.
Yes.
So there should be a fair amount of people who think that, oh, ye bakwas hai.
Yeah.
Only then you'll have counter positions.
Yeah.
A person who's selling thinks that the buyer is a fool. A person who is buying thinks that the seller is a fool. Only
Exactly.
then a trade happens.
Exactly.
So it was great meeting you, Shiju.
Thank you.
And we'll catch up again sometime.
Sure. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.